Hello, everyone. Welcome to the News Browse News broadcast. According to a recent report, Honda has suspended its plans to build a $15 billion electric vehicle manufacturing plant in Alliston, Ontario. This significant investment, initially announced in 2024, was intended to bolster the company's electric vehicle production capabilities and contribute substantially to the local economy. The reasons behind the suspension have not yet been fully detailed, but such decisions often stem from shifts in market demand, evolving technology, or broader economic considerations. This development could have implications for the automotive industry's transition to electric mobility in Canada and raises questions about the future of large-scale EV manufacturing projects in the region. Further details are expected as the situation unfolds. CTV News. A new report titled Caring in Canada 2026 by the Canadian Centre for Caregiving Excellence, CCCE, indicates that Canada's caregiving sector is approaching a crisis point. The affordability crisis is significantly impacting the over 8 million unpaid caregivers, many of whom are experiencing severe financial strain, burnout, and reduced productivity. The report highlights that 49% of caregivers face financial difficulties, with many spending substantial amounts out of pocket. Additionally, 58% balance paid work with caregiving, often leading to productivity loss. Over 3/4 of paid care providers are considering leaving the profession due to low wages and safety concerns, further exacerbating the situation. The CCCE's National Caregiving Strategy proposes 5 pillars for action: improving support services, enabling caregivers in the workforce, enhancing financial aid for care recipients, building a sustainable care provider workforce, and demonstrating national leadership. The report emphasizes that caregiving is now a critical economic issue, affecting workforce participation and national productivity. News from newswire.ca. According to the Canadian press, global shares mostly gained on Wednesday while oil prices slipped as hopes grew for progress in ending the war with Iran. Market sentiment was lifted by reports that Iranian officials were traveling to China ahead of a summit between U.S. President Donald Trump and Chinese leader Xi Jinping. President Trump stated he was pausing efforts to guide stranded ships out of the Strait of Hormuz to facilitate a deal with Iran, although the American blockade of Iranian ports remains. In Asia, South Korea's Kospi index surged 6.5%. surpassing 7,000 points for the first time, driven by a 14% jump in Samsung Electronics stock and an almost 11% rise in SK Hynix, both major computer chip makers vital for AI applications. Australia, Hong Kong, and Shanghai also saw significant gains. Conversely, benchmark U.S. crude fell to $98.72 a barrel, and Brent crude dropped to $106.44 a barrel, reversing earlier gains, though still well above pre-war prices. Newswire.ca reports that TELUS Digital, the global technology division of TELUS Corporation, has significantly expanded its international operations over the past 9 months. This strategic growth includes new locations across the Asia-Pacific region in Indonesia, Thailand, Vietnam, and Malaysia, as well as a new site in Argentina, Latin America. In India, the company has bolstered its presence by expanding 2 existing facilities in Bengaluru and Ahmedabad and establishing a new site in Kolkata, bringing its total to 8 sites across 6 Indian cities. This expansion strengthens TELUS Digital's capacity to deliver AI-powered customer experiences, CX, AI data services, and trust and safety solutions. The company now operates in over 35 countries with more than 82,000 team members, supporting CX in 60 languages and AI data labeling in over 500 languages and dialects. This broad reach is designed to meet the increasing global demand for scalable, multilingual AI systems and digital customer experience solutions. Newswire.ca reports that Restaurant Brands International Inc., RBI, announced strong financial results for the first quarter ended March 31, 2026. The company achieved a consolidated system-wide sales growth of 6.2% year-over-year, with international markets showing an impressive 11.1% increase. Comparable sales accelerated to 3.2%, including 5.8% at Burger King US and 5.7% internationally, marking the 20th consecutive quarter of positive comparable sales for Tim Hortons and international segments. Income from operations surged by 39.3% to $606 million, and net income from continuing operations more than doubled to $445 million. Adjusted operating income, AOI, saw an organic growth of 10.7%, reaching $610 million. RBI resumed share repurchases in March, buying back $34 million in common shares, and declared a $0.65 per share dividend for Q2 2026. The company remains on track for its 2026 target of over 8% organic adjusted operating income growth in its long-term algorithm through 2028. That's all for this video. Thank you for watching. See you in the next video.